Hey, how are you today? If you panicked and sold your silver last Friday, you fell for their absolute worst trap. The banks intentionally crashed the paper price to steal your physical metal for pennies on the dollar. I found a hidden signal in the delivery data that proves the global vaults are actually empty. You have less than 48 hours to position yourself before the real squeeze begins. The elites are counting on you to stay scared and stay poor during this shift. Subscribe to the Bullion ledger right now to survive the coming transfer. The elites triggered a massive sell-off on Friday, January 30th, that will go down in history. They used high-frequency algorithms to smash the price of silver by nearly 27% in just a few hours. They call this the Warsh shockwave, to blame the new Federal Reserve Chair for the chaos. They want you to think the game is over, but the paper price you see on your screen is a total lie designed to scare you. If you try to buy real metal at that price, the dealer will simply laugh in your face. This crash was a meticulously planned liquidation event. The banks knew that silver was breaking out to all-time highs above $120. They had to pull the plug to save themselves from bankruptcy. It happened in a window we now call the 30-minute crime scene. And while you were sleeping or working, the machines dumped billions of dollars in paper contracts. They did not sell a single ounce of real physical silver during this attack. The mainstream media told you that a strong dollar caused the collapse. They lied to you to hide the fact that the physical vaults are running on fumes. This was a desperate attempt to reset the board before they lose control forever. You must understand that they are playing a different game than you are. They trade digital receipts that claim to be silver. You are looking for the real metal that protects your family from their inflation. The violence of the Friday crash was not enough for them. On Monday, February 2nd, the exchange regulators stepped in to rig the game even further. They call this the Monday reset, but it was actually a forced liquidation of the people. The CME group aggressively hiked the margin requirements for silver futures. This means they forced traders to put up more cash to hold their positions. The average investor could not afford this new tax and was forced to sell at the bottom. This is how the casino ensures the house always wins. By forcing the longs to sell, they artificially drove the price down to $75. They cleared the table so the insider banks could cover their short positions cheaply. But a strange thing happened when they tried to manipulate the physical market. The price on the screen dropped, but the price in the real world exploded. The disconnect between paper silver and physical silver has never been wider. You could see silver trading for $75 on your computer. But if you walked into a coin shop, the price was closer to $100. The spot price has become a completely irrelevant number for the common man. They have broken the pricing mechanism of the global market. The paper market is now just a tool for volatility and suppression. The physical market is a separate reality where scarcity is the only law. If you are waiting for the premium to come down, you are going to wait forever. The cheap silver you see on the charts does not exist in the real world. You're chasing a ghost while the real metal disappears into strong hands. While Western investors panic over the fake paper price, China is executing the greatest commodity raid in history. The People's Republic is rotating hundreds of billions of dollars out of U.S. treasuries. They are dumping American debt to buy hard assets like gold and silver. They are using a strategy that I call the Roach Motel of the silver market. Silver checks into China, but it never checks out. Once the metal crosses their border, it is removed from the global financial system forever. The bottleneck is something called the 15-kilo standard. The West trades in large 1,000-ounce bars that sit in London vaults. But the Shanghai Gold Exchange only accepts 15-kilogram ingots. When China buys our silver, they melt down our bars and recast them into their specific size. This process takes time, energy, and money. It creates a one-way valve that drains liquidity from the west to the east. You cannot simply fly a bar from London to Shanghai to make a quick profit. The metal must be refined and poured again to meet their strict industrial standards. This friction prevents the global supply from ever balancing out. This is why premiums in Shanghai are 13% higher than in New York. The metal is flowing to the highest bidder, and the highest bidder is the Chinese Communist Party. They are draining the world's supply to build their solar empire. They also implemented strict export restrictions on January 1st, 2026. They control the vast majority of the world's refining capacity. They have decided to keep the silver for themselves and leave the rest of the world fighting for scraps. The banks expected the retail public to sell when the price crashed. They thought they could scare you out of your positions like they always do, but this time, the Western public did something that shocked the elites. The people stopped selling and started buying the dip with both hands. The Royal Mint reported that for every one person selling, 15 people were buying. This 15-to-1 ratio is a historic anomaly that signals a massive shift in psychology. People are not buying for a quick profit anymore. They are buying because they are terrified of missing out on the collapse of the dollar. The fear of missing out has replaced greed as the primary driver of the market. Dealers in the United States are reporting a total disappearance of junk silver. These are the old dimes and quarters that people use for survival barter. The premiums on these bags of coins have completely decoupled from the spot price. You might see the price down on CNBC, but the coin shop has no inventory to sell you. And they are hoarding their stock because they know the paper price is fake. A liquidity freeze has hit the physical market. The wealth effect is driving middle-class families to convert their cash into weight. They feel rich on paper, but they know their currency is dying. They want something heavy in their hand that the government cannot print. This is the great silver rotation that the insiders are trying to hide. The public is waking up to the scam. The banks are losing control of the physical float, and they are terrified. The rotation is not just happening in the West. Look at what is happening in Pakistan right now. It is a perfect example of what happens when gold becomes too expensive for the common man. Gold prices there have surged to over 400,000 rupees. The average family can no longer afford to buy gold for weddings or savings. The yellow metal has become a luxury item reserved only for the elite class. So the people are flooding into the silver market out of necessity. They are selling their gold biscuits to buy silver bars. They are trading a tiny flake of gold for a substantial bar of silver. This is the substitution effect in real-time action. When the primary safe haven becomes unobtainable, the secondary safe haven explodes in value. Silver is the poor man's gold, and the poor are the majority of the world. We are seeing a boom in high-end silver jewelry to replace traditional gold sets. Brides are wearing gold-plated silver because it is the only way to look wealthy. This shift is creating a new, inelastic layer of demand for silver. The security situation is also driving this massive change. Wearing $10,000 of gold is a target on your back. Silver allows people to store wealth without risking their lives in the streets. This trend in South Asia is a warning signal for the rest of the world. As gold climbs to $5,000, you will be priced out. You will be forced into silver, but by then, the price will be triple what it is today. We must not forget the bedrock reality that drives this entire narrative. The world is running out of silver because we are consuming it faster than we can mine it. The market has been in a structural deficit for 6 consecutive years. The solar industry is an apex predator that eats silver and never gives it back. Every solar panel on a roof contains silver that will likely never be recycled. We are burying our precious metals in landfills in the name of green energy. Now, we have a new source of demand that is even more voracious. The artificial intelligence boom requires massive data centers and high-speed chips. All of this infrastructure depends on silver for electrical connectivity. Silver is the most conductive metal on the periodic table. You cannot build the future of AI without it. The United States and China are in an AI arms race, and silver is the ammunition. We have erased nearly 1 billion ounces of above-ground stocks in just 5 years. The buffer that used to protect the market is gone. The Monday reset revealed that there is no slack left in the supply chain. When the paper shorts tried to stand for delivery, they found the cupboards were bare. The industrial users are now panic buying directly from the mines. They are bypassing the exchanges entirely to secure their supply. So where does this leave us as we move through 2026? Bank of America's Commodities Division has issued a staggering forecast. They are projecting that silver could reach $309 per ounce. This number sounds impossible to the unawakened, but the math supports it. If gold holds at $5,000, silver must reprice to close the ratio. A reversion to the mean puts silver well over $100 immediately. We are entering the era of 2 markets. The paper market will remain a volatile casino rigged by the Fed. The physical market will be a realm of unobtainium where price does not matter. You will see the price dip on the screen, but you will not be able to buy. The smart money is accumulating weight while the dumb money looks at the chart. You have to decide which side of history you want to be on. Disclaimer, the content presented in this video is for informational purposes only and does not constitute financial advice. The Bullion Ledger is not a registered investment advisor, and you should consult a professional before making any financial decisions. The collapse is accelerating, and the window to act is closing. If you want to survive the coming wealth transfer, you must join our community. Smash that subscribe button and turn on notifications for the Bullion Ledger to stay one step ahead of the banks.